with chaos at the New York Stock Exchange.
Get back in there at once and sell, sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, May 10th, 2024. And let's just go ahead and jump right into the numbers. Dow Jones up 2.1% this week. The S&P 500 up 1.8%. NASDAQ Composite up 1.1%, and the Russell Small Cap Index up 1.1%. So a good week across the board for all the major indices. Looking at the volatility index, down about 7% this week, down to 12.5. Again, bit of a complacent number. When the volatility index gets down and out like that, I start to get a little more concerned about volatility in the future. I know it sounds contradictory, right? When the volatility index is very high, 20s and 30s for sure, that's a prediction that the volatility in the market is going to be very great looking out 1 month and beyond. When it's very low, it's an indication that volatility is going to be low looking out 1 month and beyond. But what I've seen over the years and just kind of watching these things, the ebbs and flows, it's when the volatility index gets really low that I start getting concerned that it's about ready to spike. And when volatility index is very, very high, I'm ready to jump in there and do some buying. So right now it's at a pretty complacent level. Not that it can't go lower, but nonetheless. Taking a look at long-term bonds as measured by the TLT, up 0.3% this week. So a little bit of an upward move there. And when we take a look at the indices, whoa, utilities, they have just come out of nowhere. They are like on fire right now, up 4.1% for the week. That's like the best performing sector. And one of the reasons why there's this story that's developing about artificial intelligence and the demand that the data centers are going to have on power. A greater demand on power, not to mention electrification of automobiles and things like this. So there's this narrative that's just kind of like exploded onto the scene about the demand for utilities moving forward. This move has been very quick and very violent in some ways. I mean, utilities have been in the doghouse for all last year and into this year. So I've got my eyes on a couple of utilities, but I'm not ready to make the buy yet. I would like to wait for like a decent pullback, and I've got a couple that I've got my eyes on. So we'll see what happens there. Looking at some other sectors that had a good week this week. Semiconductors are up 2.5%. Staples up 2.2% this week. Financials, banks, they continue to be really strong, up 3.1% this week. They're up really strong for the year too, just under 12%, so doing quite well. Everything else up 1 to 2%. So the weakest one was consumer discretionary, only up 0.1% this week. Gold was up 2.7%. That continues to be really strong, and silver up 6.4%. Matter of fact, gold's been so strong. We've got a gold miner in our models, Kinross Gold, and it has just done incredibly well. It was up like 38% last year. And then as of this week, it hit 25% up year to date. I mean, this week alone, it was up 15%. They reported a good quarter. So I actually trimmed it today. It was really becoming a very large position in the models because of the growth. And I cut that back today, still holding on to a position because gold looks like, it could run for a while longer. And if gold runs for a while longer, the gold miners will probably run with it. So I still think there's some upside. I was talking to some technicians and look at the charts myself, and it really looked like Kinross would get up around the $8 and change range before you have to get too concerned. But it's also looking a little tired when you look at some of the technicals, and I don't want to take that risk. As a matter of fact, the entire market right now is starting to look a little bit overbought. We got the S&P oscillator hitting kind of a high number. The DeMarc indicators make it look like things can run for a few more days, but I'm still not convinced that we won't have a little bit of a drift lower in the market, a little bit of a pullback, a little bit of a retest maybe of that move downward in April. May not come right away. It could be into June or July, but I do think it's a possibility. On the other hand, I also think things are looking pretty firm for the upward trajectory of the market a little bit longer term. So if we get another pullback, we're looking to do some buying if that happens. Next week, we might get an opportunity because we've got CPI, Consumer Price Index, and PPI, the Producer Price Index. And you may recall that these reports on inflation have been real knee-jerkers for the market. When we get an inflation number that tends to be a little hotter than expected, everything just seems to react very negatively to that because it means the Fed is going to stay higher for longer, and the market doesn't want to see that. The market wants to see the Fed start to ease up on the monetary policy. So hot inflation numbers usually spell bad news for the stock market, and we've got some big ones next week. The other thing we've got coming next week, a lot of retail companies are going to be reporting next week, next couple of weeks actually. And I've been hearing some things throughout this earnings season that are a little concerning. I'm hearing just a weakness in the consumer being spoken about by a few of the companies that have been reporting. And next week's going to be all about the consumer, next couple of weeks. So it's going to be interesting to see what these companies say, what their earnings look like, what the projections are like, and how the market reacts to it all. You know, the consumer is 70% of the U.S. economy. 70% of the growth of the U.S. economy comes from the consumer. And a weak consumer could spell a little bit of weakness in the economy, could spell a little bit of weakness for the market. I'm not saying that's going to happen. I think that we still have some time before I'd worry too much about recession and that sort of thing. Nonetheless, I'm hearing rumblings from some companies that are reporting, and we're getting ready to get a slew of companies that are going to weigh in on the strength of the consumer. So we could see some reactivity with that. So all of that said, I think we're sitting in great shape. We've done some buying back in April, and the market was really taking a beating there. And now we've done a little bit more selling, trimmed back Kinross Gold. I looked at Rolls-Royce, but golly day, that continues to be strong, and the technicals on that still show that it can go higher. So we've got some cash right now that we carried into this month, and we raised up a little bit more with that trimming of the gold miner. So we're going to sit on this cash, wait for the right opportunities. I'm watching a handful of things. There's a lot of stocks out there that can look attractive quickly, and some of them are on their way. Been watching a few. So a couple of earnings reports that didn't go quite as well as the companies were hoping for, and those stocks have taken a bit of a hit. So just keeping my eyes open, waiting for the opportunities to come to us. We don't want to chase it. Let it come to us. Just be patient and wait for the right opportunities. And that's what we'll be doing. So between now and next week meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's book that big beach trip with you and the fam to some awesome beach somewhere along the Atlantic coast or the Caribbean or wherever. Maybe it's take that big trip or buy that second house or retire. You know what your goals are. Don't just think about it. Don't just dream about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.